Welcome to Monday Night Live, the weekly training that guides professionals to financial prosperity. Join our community and let's start building your wealth.
Tonight, I'm going to let Jason take it over here in a second, but we're going to talk about a bridge loan tonight. I've never heard of before. I've seen and heard of other bridge loans, but this one's pretty awesome. And Jason, anything you can add, even just in general terms about agents? Most of us are agents, of course, working with clients. How can we position ourselves to help position you better because I think together when we work together, when we work with the lenders and the agents together, it's easier to secure a client for a transaction. They feel like it's one-stop shopping. They're like we're all in it together. So anything along those lines, you'll get questions all over the map too. So if you want to go and introduce yourself, Jason, I'd appreciate it. You're allowed to share your screen. I made you co-host. Anything you want to share that way. Downloads, deliverables, we'll take care of that to you for you too, if you want. So
No, it sounds
welcome.
good. I know Mo's got a flyer that has some of the bullet points that we can send out to everybody by all means with contact info. But my name's Jason Dupree. I have been in lending for 16, 17 years. I don't know. It just keeps going and going, it seems like, which is a good thing. I am VP over at Texana Bank. I'm over what we call our RIMLO program, which is our real estate mortgage loan originator. So we take agents like a lot of you guys out there now, get you licensed as a loan officer, partner you up with a loan partner, and allow you to start doing the loans on the deals that you're already working as well as refis, everything else. So, and Mo, who is one of our RIMLOs, took a real interest in this. Is probably one of our most popular products we offer is our bridge loan. And we work, just so everybody knows, we are 50 states, federal charter, and then we not only do in-house lending, but we have about 69 different broker partners we work with as well. And so, bridge loans are something I've known about for a long time. And then every time I start to get into one, it falls apart. It's either super expensive, a lot of limitations, you're pigeonholed when it comes to the purchase of the new property. And in the end, the borrower always winds up just finding a better solution. And it's one of those where I can't argue it. It truly usually is a better solution than the traditional bridge loan product. And we do have those traditional bridge loans as well, but it's just something that is, most people don't even spend time with them because they're just not helpful. And then one of the big things that I think has made this product in particular so popular is there is $10 trillion of untapped equity in homes today. So like I'm working on, I also do sales and social media training. And on a training I'm about to release Wednesday, I talk about pre-qualifying your clients. And one of them, and we looked about how do you help pre-qualifying with unique questions. They don't feel like they're going through the qualification purpose. And one of the ones talked about for your repeat buyer, how long have you owned your home? Have you owned your home more than 5 years? And the key there is if somebody's owned their home more than 5 years, the amount of equity they have accrued, even with a 3.5% or 3% down payment, is astronomical. They are now measuring your economic status as when you purchased your home. If you purchased pre-2020, you have such a leg up on everyone else who's tried to purchase after the fact. So this product really helps to tap into that ability and put people in a much stronger position, not just with the offer, but also the new loan they're getting as well. And this also works for your listings. So too many times, people only think of a lender as helping you with your buyers, when in actuality, they should be helping you with your listings as well. Mo and I have talked every listing. She comes in, we look at scenarios of, hey, should you do special financing incentives so that property doesn't sit, especially as we're starting to transition into a buyer's market. This is one of those products. Not only can it help if you get multiple offers, maybe this is how you get the highest and best offer to really stand out and shine because they can remove their contingency. But also, what happens when a deal starts to fall through? Nobody expects the listing agent to swoop in like Superman and save the day, but this can allow you to do that. The average turn time on one of these loans is about 14 days.
Wow.
So even if you get to day 28 out of a 30-day contract, it falls through. It's still faster to save it with a product like this than it is to cancel the contract, relist the house, go under a new contract, and go through all the hassle again when you want to move on and find your next client, your next buyer, your next whatever you need to start to keep things going. And the best part is not only do you free up your own time, but you come away looking like a hero, which in both our worlds, there is no better advertisement than having people rave about you being able to pull out something that nobody else could do and nobody thought of. So that's one of the things we love about the product and we think is so great. What I want to do is we'll go through some of the basics. Hopefully most of it will make sense, but then I want to run a scenario. We'll use somebody who's got a property right now so that, again, we're all salespeople. I don't care what your real title is. And salespeople have a hard time paying attention until there's money involved. So if we use a real example, it'll tend to make a lot more sense for all of us. And then we'll go that route and see what we can do to help everybody out.
Awesome.
So go right ahead. Sorry, Gary.
No, I'm just saying that that's great. I really appreciate this. I've been looking forward to this ever since Mo brought it up, and perfect timing too. We've been pushing real hard on new construction lately, and you know how new construction is. It can take 6 months or a year to get a house built, and people and it's competitive. You know,
Yep.
so for people to have something to sell before they can buy new construction, because new construction people, I mean, they cringe a lot when somebody says, "Alex, I got to sell my old house." Sale contingency. With something like this, somebody could take advantage of the bridge loan, get their house positioned so that there's 10 homes for sale in the neighborhood. Their home's the number one home. That's where you want to be.
100%. And to take that a step further, just because I remember we talked earlier before we got started, but Gary's familiar. I originally lived up in Lake Norman for quite a while. When I first moved to the Charlotte area, I met my wife, had a townhome. She moved in and we're like, great. And then we decided, okay, time to start having the family talk. It's time to start looking at the house for the kids. And so we went new construction, which I know a lot of clients are doing right now because of inventory. And we put our house on the market and we thought, okay, great. Well, we don't have to rush. So that's awesome. Our house was under contract in 11 days. And I was just like, oh, okay, what are we going to do? Because the home's not going to be finished being built for another, couple of months. So then we had to go to an apartment. Well, if you've lived in any kind of home and then you go to an apartment, it is a culture and shell shock, like it's unheard of. So there's that aspect of it. And then there's also the fact that my mortgage was cheaper than what the apartment was the cost of. So I'm like, I'm downgrading and I'm paying more. Well, this makes absolutely no sense. And then I'm moving more than half my stuff into a storage unit, which then I got to move it a second time. It's another pain in the butt. And we were building almost with Charlotte traffic, hour and a half away. So to go and do the checkups on new construction, and this is before new construction became like it was being built like children, where they could actually line things up somewhat back then. And I would say, if you keep abreast of national news right now, a lot of builders are really curious how they're going to finish building homes right now when they don't have the workers to get out there and do the job. So huge potential issue there. So not only does it make it more attractive to the new builder, but if I could have done something like this, I could have stayed in my home the whole time, for that remaining part while I was waiting for it to be built. I could have then made a much easier transition into the move because I didn't have to do one of those where you schedule your first 2 days of sitting in a house that it barely has anything, getting utilities turned on back when you had to wait for the cable guy and all that kind of stuff. And you have blinds come in and you want to do all these things where you move all your junk in and then move in on a rainy day, which just adds to the fun. I could have waited and planned these things out to make them a lot more favorable, as well as I could have put a whole lot more money down, which would have gotten me better terms on my loan, would have made it less stressful to qualify for the new home. A lot of different things. And I might have been able to sell the house for a lot more because I didn't have to take that quick offer, worried about oh my God, I've already put down $5,000. I don't want to lose that money on the new construction property. And so, so that's a huge part of it by all means. And then one of the biggest ones, I don't know where everybody's located, but I think Gary, you're in Wyoming, is that right?
Well, actually, I'm in Virginia. Wyoming is just where I incorporated.
Okay, excuse me.
But yeah.
So Virginia, pretty good weather year round for the most part, but if you're in an area where you get real winters, we all know that the house will sell easily 5% more in the spring and summer than it does in the wintertime when people don't want to be out, when the house looks smaller. I don't care how much heat you got going, it always is still going to feel cold. You wait up to 6 months to sell that home, you will recoup more than the fees that it costs for the bridge loan. And again, you come away, everybody's happier. So that's a huge part of it. We'll dig into some details real quick. So you can, if you want to take a couple notes, this is some stuff to help you guys out for the future to think about this. Max equity you can access is $500,000. Okay, so that would be the very max you're looking at, which still $500,000. If you're in the luxury properties and jumbo loans, you're in a great situation with that kind of down payment. The loan guarantees if you are not able to sell the home in 6 months, that we will buy the home. So that is what in this bridge loan removes the current mortgage payment from the debt to income calculations on the new home. So this mortgage will not count against the ability to qualify for the new home. Now, we don't want to buy homes. One home's been bought in 5 years. We've had instances before where you needed an extra 2 weeks after the 6 months under contract. Those allotments have been made. Nobody wants to buy and own the home. That is not the goal of the program. So again, they're going to work with you. The purchase guarantee amount will be predetermined before paperwork is signed. So it's not a surprise. I do recommend go talk to one of the other overnight buyers out there. We all know the big companies, and get another quote from them. And then if that's higher, that is your true plan B versus what the guaranteed purchase is. Because again, we don't care. We don't want to own the home. 6 months of payment. So the way it works, the buyer will not make payments on the departing residence. 6 months of payments, taxes, insurance, and mortgage will be put in an escrow account. If not all 6 months are needed, return to the buyer. There is no interest on the loan. So there's no, whether you sell it in month 1 or month 6, it's the same cost to the buyer. Mm-hmm. There is no accruing interest, so there's no interest rate to worry about. You can use part of the future proceeds to pay off debt to qualify to buy the new home. You can also reserve up to $35,000 to do work and upgrades to the departing residence. So another key factor, you walk into a home and they've lived there for 20 years or more, they've raised children there, and they've got school projects from the 6th grade still tucked away in a closet. This is the kind of product you should be discussing with them, because now you get them out of that home into the new home. Hopefully the kids come back, throw a ton of stuff in the dumpster. No reason to move all that stuff that nobody needs anymore. And now coat of paint, maybe even a cheap redo of carpet or refinish of hardwood floors. Now we're seeing the property values skyrocket over what it was going to sell at when it was completely just, again, just cluttered to all get out. So again, huge benefit there. Also, part of that $35,000 can be set aside to cover moving expenses. So this is also a great product if you've got somebody moving a large distance. Because again, time is on their side. They don't have to be out by a certain date. They have the time, but then also they can cover that long distance move as part of the proceeds. The big rule: the new property, it has to be a primary to primary residence. So they can't be going into a rental and then want to go buy a investment property or vacation home. It has to be primary to primary. That's huge. And some stats just to help you out. So, and these are a little bit dated, of course, but Homes with minor improvements tend to sell 30% faster than homes that are untouched. Cosmetic updates, paint, carpet, kitchen refresh, curb appeal, minor stuff. A fresh coat of paint tends to boost the sales price by about 9%, where staging the listing can boost it up to 17%. And the whopping overall overarching cost is 2.25% of the final purchase price. So if I'm talking with a client about this, I just say, imagine there's a third agent in the transaction. So you got your buyer's agent, your lister's agent, and then the bridge agent. The bridge agent is going to take 2.25% of whatever you sell the home for. There is a title fee that's going to be anywhere from $1,600 to $1,800 because it has to be legally listed on title work, and that's it. So the idea is, if you can go in and given 6 months, given the chance to freshen up the home, given the chance to maybe do more than just minor repairs, all of that, if you could sell it for an extra 2.25%, let's say 2.5%, there's no loss to the client whatsoever. Yep. Now you add on top of the kind of the luxury benefits, the icing on the cake, the 6 months to make the transition, the ability to move. I had a client who did this not that long ago. He's my sales coach. He's awesome. And his whole studio is in his home. So having to pack everything up and move disrupts his business. His business does really, really well. He can't afford that disruption. He's able to make that transition much smoother now because he has time to move personal over and then move his studio all in one fell swoop versus trying to do everything at once. That way he's able to perform for his clients, doesn't interrupt. And a lot of our clients right now are working from home in one capacity or another. Even if it's a Zoom call, they're not on camera. We know when you start packing everything up, trying to find those things to get organized again is extremely difficult. This means, hey, I can drive that stove over and set it up myself. The movers don't have to do it. I've got the time and ability. 2.25%, got that. No payments for up to 6 months. And then at the 6-month mark, again, that is when so better way to put it, that is when the bill is due. So whatever money they borrowed, the 2.25%, all that becomes due. If something changes, whatever, everything's paid back, different story, but generally the idea is you've got 6 months to make that sale. Pre-qualification, so it is a 100% manual underwrite on the pre-qual. And the reason it's manual is it's not like a normal product. There is no debt to income, none of that stuff. It is an assessment of the value of the home, how much is owed, and then it's more of a probably something you guys are much more familiar, more of a CMA of that investigation of what does the market look like? Is this house going to sit? Can this house sit? Move quickly? All those things are taken into account. So this is not the kind of product where you can't get rid of a home and then you go try to take it out because that's going to hurt the value it's given, or they won't do it at all. Now you go and you get the pre-approval ahead of time as a backup contingency. And that's the other thing. Sorry, I kind of missed that. You've got a house. You're not sure how quickly it's going to go. There may be issues. We put the bridge loan into effect. You don't need it because you're able to sell it and get that transaction closed in time. The client's not out a penny. So it is truly a fail-safe plan B. It's like getting on the airplane with a parachute. If the plane doesn't start to crash, you don't use the parachute, hand it back, you're good. But if the plane does start to go down, the transaction does start to go south, by God, you're happy you have that option. So it can be done right away. Again, it's one of those things, but again, it's not going to cost the client money unless they use it, which is, again, a huge lifesaver. Now, the other benefit, we do the bridge loan. We also have to do the purchase on the new transaction. But we have freedom with that new transaction. When you did a bridge loan in the past, you almost always broker it. Just about nobody does bridge loans in-house. You broker it to, let's say, Acme. Acme knows, okay, you're doing a bridge loan. There's not much bridge loan competition out there. So then he goes, well, we're gonna get you for sure on the bridge loan. We're gonna make our money there. But then we know you also have to use us for the mortgage on the new house at the same time. Well, you can't go elsewhere. We got you. We're going to get you there as well. And the rate's not competitive, the fees aren't competitive. And now you got a client who's really feeling ripped off on both ends of the spectrum. This bridge loan is super clear, easy. It's one of the cheapest ones out there. But we can then do the first loan however we wish. If it's an in-house loan, great. If it is with one of our broker partners, great. Whatever gives the buyer the biggest advantage, the best opportunity, we can go in that direction. And the first mortgage is not impacted by the bridge loan whatsoever, meaning there's no negative to the new home mortgage because they're doing a bridge loan. It doesn't play into any of the factors that adjust pricing or rates whatsoever. On the other hand, because they can tap into a lot of that equity, maybe we do a 25% down payment, which gets them better pricing than a 20% down payment. Maybe we do something like a 40% down payment, which with a 40% down payment, you can get almost the same exact loan with a 640 credit score as you can with an 800 credit score. So the idea is we can start using that to set those things up and put them in the best situation possible, without the issue to worry about. So, sorry, questions while I double check my notes. Well, I threw a lot at everybody. There's got to be something.
Yeah, feel free to chime in, guys, especially if you've got, somebody out there looking to move, got to sell something and they want to buy something else. I know volume is low. So Jason, the last year volume is down, like it's to a 30-year low. We're not in a depressed market. It's suppressed. Prices are still fine and interest rates historically are actually pretty good, in the sixes. But the number of property changing hands, that's what's low. But that's when new construction comes in. I mean, that's the answer to shortage of housing. There is no other answer. Um,
And I'll
I mean,
tell you, the
if
only
you have an
caveat with
example,
that, just so everybody knows, with the new home, with the new construction, is they're not going to have the option of using the builder's lender.
right?
And we know they're throwing around. And so, if everybody doesn't know this, I'll try to wrap this up in 30 seconds. The reason builders are having these unbelievably attractive offers is it's their Costco chicken.
Mhm.
They are overpricing the house because they can in this market, in the market we've had the last few years with the lack of inventory and everything else. And then they're just giving away the financing to guarantee that they can sell that home. And then at some point, maybe they'll make a little money off the financing, but in essence, they're like, whatever, forget it. When 5 years ago, 6 years ago, when builders really started getting into the lending space, they gave away money. We were able to match that. Then they started wising up and realized, hey, listen, they can match dollar for dollar, but if we add a sunroom instead of a patio, well, that's worth, let's say, $10,000. Only cost us $3,500. I can't come up with 10 grand to build you the patio in essence. So they switched to that. Then that wasn't enough anymore. So now they're doing these crazy financing offers. But that is the one thing, just to let the client know, if we're going in with a bridge, they won't have that financing option with the lender. So that'll be something or with the builder, excuse me. But for a private builder or a small builder, not your Madamies and Ryan and Lenore, that is where this kind of product, I would be going to the builder and saying, hey, listen, I should be your agent. You should be giving me heads up when you've got stuff going on, because I have access to a product that will make things so much easier and take a lot of the pressure off of them when it comes to closing, because people aren't backing out because their home didn't sell as quickly as they thought. Or they need the other big one too is delays. So with tariffs, when I was buying, I know the cabinet maker went out of business. So they had to find a new cabinet maker for the development. That can slow things down quite a bit. Well, now you don't have the buyer coming in yelling at you going, I don't have any place to live. Like, what's going on? What are we going to do? They have that freedom, that time available. So it can make that transition a lot easier, especially for your smaller builders that don't have the resources to bring in an army to finish a home in time.
Hey, Jason, someone had a question. Laura Lee, she said, Jason, do you have a like product for individuals looking to build an ADU with solar in California?
Hi, I just want to take a moment to thank you for watching a recording of the Monday Night Live class. Hope you're getting a lot out of it. I'm sure you will. I wanted to let you know that, you can come to Monday Night Live whenever you want, but you can also participate more with the team. Why don't you set up a call with me, a one-on-one strategy call? I can go over everything with you, show you everything that we have to offer. For example, did you know that on our team, not only do you get your leads, we actually give you your own account on our lead gen system. So this puts you in control. You're not waiting on somebody to hand you leads. You get to pick the ones you want. Okay? Huge difference. We have 21 of our own proprietary marketing campaigns. They're all copyright protected. We're the only ones that can use them. Okay? The coaching is absolutely one-on-one. We got 3 coaches. We even have a 4th success coach that we have access to. Okay? One of left fewer than 100 in the world. Okay? One-on-one coaching. Right now the big problem is volume. We need more transactions. We need more inventory. I get it. Well, we know how to get it. Our team actually outproduces the national average by more than 2 to 1. So if you're struggling, don't do that anymore. If you're a solo agent, if you're a team, let's just talk. Smart entrepreneurs are always open to discussion. Learn what we have to offer, and then you can make an informed decision about staying where you are or moving on. You've got to decide, if you're not where you want to be, you've got to take action to get where you want to be. Let's see how we can help you do that. I look forward to talking to you. Click on the link, set up a call. And by the way, I'll see you on the next Monday Night Live.
So nothing that would be, okay, so this doesn't work on this only works on new construction when it is the construction company that is putting the bill. This would not work as a construction loan. We may have a construction loan product that would help with that. I know some of the FHA, like 2 or 3K products and some of that stuff do account for solar as well. I would say right now with the issue with the solar rebates, national rebate, I don't know if that may be changing very, very quickly because the price of solar is about to more than double. So that's probably a longer answer than you were expecting.
Quick question. While you're transitioning states are you nationwide, or are there states that you are not able to offer this in? Because probably most of them you are.
No, perfect question. So, and that was going to be our next topic. So thank you. So, bridge loans in general are not available in every state. For example, it's one of the states we do the most business. We're named Texana, so you can probably guess right there. Texas has weird lending laws that prevent certain things like this. They make cash out refis and other things more difficult, as well as some veteran loans. So we don't care where the new home is going to be because that does not affect the bridge loan. The bridge loan is only affected by the departing residents. There is, let's see, drop this. And this is a unique product, so we are constantly working on getting it available in more places. Let's see if this will work. Yep, here we go. So I just dropped in the chat, here are all the states that the departing residents can be in. The new residents anywhere in the country, we do not care. All right, so I thought the best might be to run an example. This will help out a little bit. So who has a client right now that we'd like to maybe just run a hypothetical scenario for? All I need is like an address. Okay, thanks, Mo.
I'll give you one.
All right, perfect.
Give you my brother some because we have to do some work here. 1150 Sims Road, SIMMS.
Tennessee, Maryland, or Kentucky?
Well, actually, you know what? I apologize. It's actually Virginia. I forgot about that.
Okay.
So let's see here. How about this one? How about Charlotte? 1023 Oriole Street in Charlotte.
There we go. Perfect. All right. So how much, top of your head, would you expect to be able to list this property to sell for?
Well, that's a good question. I'm going to say 1.25 million.
Okay. Perfect. And we'll estimate the mortgage on the home is, we'll say it's $500,000 just to kind of keep the math simple. And then we'll say their current payment is, let's say $4,000 a month. Put in some fake information. Sorry, guys, it logged me out while I was waiting. I thought I was being diligent, getting it ahead of time. So what it's going to tell me as soon as we get this logged in is it's going to give me what the automated assessed value is, or at least within a ballpark before we do a true pre-approval. It is then going to figure out at that, it'll end up to 75%. And then at that figure, it'll subtract out 6 months of payments. It'll subtract out the title fees. And then it's going to tell me, here's how much money is left to be able to be used towards, towards the down payment, as well as the 35%, or 35,000 if you want to take it out.
What you're using to calculate, is that something you can share? Like if you
It's
did a
a
screen share,
automated
like AVM, automated valuation.
yeah, it's something internal. It's not it's
Okay.
not put out there. Um
It's the wizard behind the curtain.
yeah, sorry about that.
That's
Um
okay. That's why I thought I'd ask
all right,
first
so it's
before.
not coming up right now,
Yeah.
but I can run the numbers for you. So if it comes in at 1.25, it'll lend up to 70%. So we start at 1.25 million, 70%. So that gives us $875,000 minus the $500,000 that is owed on the property. And then it's going to subtract out the 1,850 for the potential title fees. And then it's going to subtract out 6 months of mortgage payments at, let's say, $4,000. So that is, see, 24. So that leaves $349,150 that they can be used now as the down payment on the new home. We could set aside 35,000 of that to go towards revamping the home. But again, it gives us that amount of money to kind of play with to put the buyer in the best possible situation going forward.
Okay.
Let's see if
Jason, I just wanted to say something really quick.
Mhm.
Yeah, like, so one of the things that I love about this particular product is that, depending on where your state is, as far as the departing property, is that you can kind of work this into your listing consultation. Because, a lot of times, I don't know how many of us, I'm sure a lot of us have done this before, where you've had to sell someone's house and then help them purchase. I've been fortunate to have some clients where they could still qualify for their next home and manage both mortgages. Like, they could purchase first before we sold. And then I had some folks where it had to be done at the same time. And it was just incredibly stressful for them. But like, then the gun was on me to make sure that I sold it as fast to have, a double close on the same day. And so I just think that this can kind of help with the objection, especially when folks are saying they don't want to sign the listing yet, or they want to purchase first before they buy, or they want to, see where they're going. It's like this just answers some of those objections on the front end. And so you can answer some solutions with going ahead and, them not essentially having to come out of pocket to do some of those repairs or moving costs or paying down their debt so they can qualify for a larger loan, being able to write an offer that's not contingent on another offer, knowing that their house is going to sell within 6 months, regardless. It's just taking away all of the objections for us to go ahead and get them to sign that listing agreement and sign the buyer rep agreement. So when I learned about this, at Texana, I was like telling Gary, I was like, I think this would be amazing for the team just to have as another tool in our back pockets. Oh, yeah.
Absolutely. Yep. So we really, currently we can use the proceeds for down payment on the next house, but also we could use it to, again, spruce up the one that we already have that we're selling, um, to make more money. And that's, to me, that's in today's market. But when you have, still low inventory and you have a lot of parts of the country is still a seller's market, um, but it's shifting. That to me, I mean, that gives you a huge advantage. If there's three, four houses for sale in the neighborhood, and yours has all the new carpeting, fresh paint, doorknobs and switch plates and all, all the landscaping done. I mean, it's hard to compete with those houses. So they usually sell for top dollar, sometimes over list price, and the shortest amount of time.
100%. And I know a lot of times the apprehension of doing the work on the home is they don't want to come out of pocket. They don't want to
Mhm.
diminish their ability to buy the new home because they've spent their savings or whatever on those upgrades. Well, now it's not, you're not, same way when I talk about loans and interest rates and points, it's no longer you're spending money. It's no longer, it's an investment. Does it make sense to reinvest $15,000 back of your future proceeds back into the home to sell it for an extra 30, 40, or 50,000, whatever you think is possible? Especially when we're talking like six, very cosmetic. Again, maybe it's, landscape, I'm sure, but, getting somebody maybe for some, a couple of tree branches here or there that, stuff like that, that's a bigger project for a new homeowner to maybe worry about. But again, if it's coming out of the proceeds, not so easy, but something that needs to be done or should have been done a while back. And I think, and I'd love to hear anybody else's opinion, I've seen more homes fall out of escrow due to home inspections than I've ever have in my history as a lender. And my thought process is people bought homes, they were going to sell them, interest rates skyrocketed, and everybody got scared and didn't move. But because they were in the selling mindset, the maintenance stopped. People didn't take care of the homes the way they used to because they saw them when they saw them as a long-term option. And we're seeing, I would say, the highest rate I've ever seen of homes fall out during home inspections, and especially specialized inspections like sewage, when they're running the camera through the sewage lines and some of those things. And this is how you get around that. Because again, if it's a $20,000 repair, nobody wants $20,000 of seller concessions to do what, a rate buy down or something like that, when they got to come out of their pocket with that money to do those repairs, but now it can be done beforehand. And so again, huge benefit. And really, again, like you said, if I always looked at it, if every house in the neighborhood went on the market at the same time, can I make mine stand out so that I can sell my house? Well, like you talked about, fresh coat of paint, some updates, those kind of things. Now, if everybody's trying to sell because everything fell through, at least I can get rid of my property, and I've got a guarantee that somebody's going to buy it already. So again,
Yep.
that's a big part. And one other really kind of unique, specific example that I would say that to keep in mind. Doesn't come up often, but this would have been perfect. Unfortunately, we didn't have the product at the time. Had a client, they were actually downsizing when it comes to the cost of the home, that kind of thing, because they were moving to a more rural area. So they're moving from the city to the country, in essence, lots of acreage. Good size home, needed a lot of updates. And so we looked at the traditional bridge loan, but it was going to be so expensive that even though they had plenty of money, they said, I'd rather live in a construction zone than throw away that much. Heck, we can do Airbnbs for a couple of weekends to get away from everything. versus what it was going to cost going with a traditional bridge loan and then the company first mortgage. If we would have had this, they could have stayed in their current home, taken equity out to do the work to the new home beforehand after they close on it by setting that money aside, owned both homes, got all the work done, and then transitioned into it and then sold their home. Instead, they sold their home. I don't know top dollar or not, but then they had to live through months and months of construction, getting the new home into shape to where it was livable for them. So this would have made it such an easy transition. So if you got somebody like that, kind of the 2020 COVID move out from the city out into the rural area, if you got somebody else who's looking at that plan, this is how they get that home that maybe doesn't have all the city amenities up to par before living through it. And so I would say if you're interested, reach out to Mo. Mo is now a licensed loan originator with us, as well as an amazing agent, as you probably already know. And she can help you with setting up the bridge loan for your clients. We will work to get them into the new loan for their new home all at the same time, under the same roof, and get things moving along so that, again, you can get the keys to the client faster.
Yeah, this is pretty awesome. So is it the things you put in the chat mode that the PDF such as so they can just click on that and download those things?
Yeah, can you see my screen now? I tried to share it. This is the flyer right
That's
here.
that's what she's okay. That's what you put in there. Okay.
I can drop in a link too in the chat in one moment.
Yeah, you're applying on link, that'd be perfect.
So let's if you guys, if you're on the team, you've already got most contact information. Just go to the Global Investor Agent website and click on Meet Our Agents, and everybody's in there. But also, it's if you go into the team website under the resources, look for GIA Team resources, and you'll see you click on there. There's a download there. It's a not DocuSign, Dropbox. It's not Dropbox, Google Drive. Sorry, Google Drive. And you can download that there too. Just keep in mind that Sugar updates that probably weekly, if minimum monthly. So, hey guys, any questions for Jason or Mo? But so, I mean, Jason, while they're thinking about that, um, with what you're seeing, everybody's always asking, what do you think rates are going to do? I know that Fred just said they anticipate 2 rate drops this year, but um, and you've got a pretty good thumb on the pulse in multiple states. What do you see happening like from Carolinas over to Texas, you know?
Yeah, so I would tell you guys, I truthfully don't think we're going to see much movement in the rate market.
Okay.
And part of it is you guys are still doing too good a job. Homes are still selling. Like if homes weren't moving, and we had a bunch of properties, a bunch of inventory sitting, I would think we would see a much more drastic approach. Unfortunately, because listen, I've been suffering through it as well with a lot of people. 2020, I closed 346 loans that I originated, not my team, just me personally. 2021 was busy, and then I think for a lot of us, we were so busy in 2020, 2021, we were kind of ready for it to slow down a little bit, kind of catch our breaths, kind of get that emotional recoupment back from working nonstop. And instead, we had to work just as hard for a lot less because things got way slower, but you had to work harder to get that part. So we haven't had that leveling off period yet. But I see them, of course, coming down. I mean, every client I work with, every loan officer who I work with, it is strictly like, listen, every loan we do today is a short-term loan. I would say there's just about every loan has got a 3-year lifespan. Probably shorter than that, but I would say roughly 3 years before they're going to be refinancing. So yeah, I think they're going to come down. I don't know now. Right now, it's a bit of a grudge match between the Fed and the presidency. They're of course not working hand in hand, and I don't know if I would say it's probably not helping. They're not technically supposed to work hand in hand, but you get any stubborn old guy who's been doing something long enough, and you tell them what you want him to do, they tend to not to do that. So I don't see Powell is just all of a sudden going to drop the rates. And we'll see. The other big one is construction. I think is definitely slowing down with some of the deportations and that kind of stuff. So which I think will drive prices up a little bit as well. because there's less inventory, which gives this false sense that the real estate market's doing just fine.
Yeah.
You know, and so, and I think, again, I'll give you my, I don't know, I don't know if it's conspiracy theory, but I'm worried that at some point, if we don't see a major reset in home values, which nobody really wants to talk about, that we're going to have to move to a whole new product of a 40-year mortgage becoming the new norm instead of a 30-year.
Yep.
Because more and more deals I'm looking at, you know, it used to be, for anybody who knows, you have a front end and back end debt to income ratio. The front end was just the home, the back end is everything else. Used to be the front end 30, 35%. That was, you know, about average, maybe a little bit higher, but a lot of times lower. Back ends were, you know, 40, 45, maybe 50, maybe up to 55, went towards the limits. Right now, we're running a lot of issues where it's not the back end so much as the front end and the back end are almost the same, because people aren't spending money on a lot of other crazy things a lot of times, no matter what you hear or see out there, that the mortgage is becoming such a huge amount of their monthly budget, you can't afford it anymore. And then you start
Yeah.
throwing in, you know, if you're buying new construction, not to harp on contractors, but the quality is not like it used to be. The products that are in the home are not like they used to be. You know, that's for anybody. Refrigerators don't last forever. I mean, I know some people probably still have parents that the refrigerator is older than you are because they made them to last forever, where now it's, you know, every 5 years they seem to kick the bucket. So again, I think we have some potential issues there as well. And I do apologize, just 2 minutes. The other product that is saving more of my agents' deals than anything else, we have access to a home equity line of credit that we can see clear to closes in 1 day. It's 100% AI underwritten. So we're seeing on a Monday we start the loan, we're seeing by Friday we're scheduling closing. So if a client's got other properties, especially if you're working with investors, I've got a couple right now before Memorial Day weekend. We got them pre-approved on the HELOC. Now they were out for the Memorial Day weekend. While they're at the beach, they're looking at properties and enjoying the sun because they're going to buy that investment property. But again, it closes so quickly, we can use it to save deals a lot of times as well. So that's another one, and it's 100% AI. And I've seen people qualify. They probably shouldn't qualify for nearly as much as they've had, but this company has looked at it. We broker it out to them. They've looked at the market. They see the market as being firm. They're only going to lend to a certain amount, so they're not worried about recovering their end. And I've seen it do some wonders for people lately.
Yeah. Well, we'll tell you, it's interesting you brought up the 40-year amortization term. In Japan, they've had 100-year mortgages in Japan now for over a generation. You know, they're literally 3-generation loans. You know, it's just what they had to do so people could buy something. You know,
Yeah,
so
I don't see right now. Nobody wants to see the values collapse because, especially the older
yeah,
generation, there's so much. You know, they went through the collapse of the economy. 2010, they lost so much in, you know, retirement that now almost all of it's tied up in being a house that's worth a fortune right now and it's debt free. And if they lose that, we've got an entire generation that's not going to have any ways to support themselves. So again, and hey, listen, I may know nothing, guys. I'll tell you this much: if I've learned anything the last 4 years in this business, everything I thought I know, I've seen something completely flip. And you know, we didn't think rates were going to be this high nearly this long. Everybody thought it was 2 or 3 years. We'd be back. We'd be back to fives, no problem. Now
yeah,
nobody's batting an eye at 6.5%, 7%.
yeah, yeah. People eventually, what happens is it's not necessarily consumer confidence; it's consumer impatience. People just get tired of waiting. Like, I'm just going to go ahead and get something. And we're seeing more of those sales now. But I also know that a lot of people who bought a home, the first time they bought a home was, say, the early 2000s, or even better yet, the 2010s, when rates during the recession went down and they were seeing 3% for all those years. That's their normal. Where someone like me, my first home was in 86, and you know, and leading up to that point, rates were 18, 19, 20, 21%. When we hit below 10%, when my first mortgage was like 9%. And we thought that was
9%,
awesome.
three
You're
points,
below
and being a
10%.
special.
Yeah. They had a lot of interest. They had a lot of buy downs. You could get a property and your initial rate is 5%, then next year it'll be 6%, next year 7%. We're probably going to see. In fact, we're seeing some of those now, actually. You know, but also with arms, I mean, there's always a market for arms if it's the right market. So there's always a solution, guys. I mean, I got to tell you, all the time I spent worrying in the early days was just wasted time because we're in a free market economy. Lots of entrepreneurs are driving these things, the product development. There's always an answer around the corner. It never fails. Everything always ends up being okay. I'm not saying that people don't experience pain here and there. The Lord knows I experienced my share of pain. I'm sure some of you did too. But things will turn, and interest rates, even if they don't go down, realistically, just look it up historically. I mean, sixes, that's really good, historically speaking. Oh my gosh. I was buying rental properties at 8 and 9% all day long, thinking that was great, you know? So, in any case, short of ramble, there was one other thing I was going to bring up that just drew a complete blank, though. Um, oh, I know what it was. There's Remlo or Texana Bank. Do you have products for people buying up to 4 units, 4 units and below? Any
Oh, yeah,
type of
we actually even have some products that will go up to 10 units.
okay.
But yeah, and one of the big ones again, especially, all right, so VA and FHA arms are very hot right now. We're sometimes seeing up to a half a point better in interest rate on that ARM product, again, for 3 or 5 years. And again, we're talking about 3-year loans. Everybody's going to refinance, especially in an FHA or VA loan, because there's this streamline and IRRRLs, which make it super easy. But another hot market, especially if you're targeting first-time home buyers, anybody can do it, but I find it more is geared towards somebody, a first-time home buyer. Duplexes, triplexes, quadplex. FHA now allows like a duplex 3.5% down. So the idea is they can move into that duplex, 3.5% down payment, and most times that second unit will just about be paying at least 75 or more percent of the mortgage payment day
Yeah.
one. Because they can rent out the other unit. As long as you're living in one, they can rent that other unit out. And so if they can do a little more down payment, they can do a 3 or 4 unit. And I know plenty of success stories, even prior to this, where you get somebody, especially young, when roommates aren't such a big deal. So a shared wall, it's a little tougher when you got somebody who's maybe established with children to do maybe kind of consider this, but especially somebody younger, super easy to do 3.5% down payment and get in there and start using that second one as rental income. And then a couple years, save up, go buy your next home, whether it's your, long-term home or another one. Now you've got 2 units you're renting out. If you buy another 2 unit, you've got a third unit you're renting out. And it's a great way to build that portfolio. One of the greatest success stories I've ever heard in real estate was a kid who was at Temple University. His brother co-signed for him, bought a home, dug out the basement. So it was a 4-bedroom row home, dug out the basement, put 4 more bedrooms downstairs, rented out to 7 buddies while he lived in it, moved out, rented all 8 individual units or all 8 bedrooms, had so much income generating from that, was able to qualify to buy his next home, regardless of his job. And literally that like transformed him into, I mean, he's the only kid coming out of college who took the job he wanted to, not a job he had to. Because again, he had this foundation and he just over and over again. Same with VA. It's one of our great benefits, and Mo knows this about being a REMLO, is you can lend in all 50 states. You get a VA borrower who's active military, every 2 years they're getting new orders. They're moving to a new area. They buy another property, that VA loan. By the time they get out in their 50s, they've got a great pension. They've got lifetime benefits, and they've got maybe 4 homes under their belt, all generating rental income because they're all near the base. That's a life I'd like to live versus current prospects of work until I can't work anymore. I don't know about the rest of you guys. But being able to retire in your 50s and be set like that. So there's definitely those opportunities. It's just finding the right clientele and then getting them to really consider the alternative means versus the traditional, 2.5 kids, a dog, and a white picket fence. Getting them to think a little outside that box.
Yeah. Yeah. Yep. We did my first house was a 4-bedroom, 2-bathroom ranch in Virginia Beach. And I bought it with my college roommate, Socrates, and the other two, we each had a room, of course. The other 2 rooms were rented out to 2 other guys, and their rent payments covered pretty much all of our costs. I mean, other than like $50, you know, with the original house hack. Now they call it house hacking. We didn't call it that back then. We
Right.
just called it, you know, hedging our risk, and buying a boat. We took the extra money and bought a boat, so, and everything's relative. That house, guys, cost $63,000. Now that house is worth about 10 times that, easily $650,000, So, of course, we didn't keep it. We sold it, which is one of my big lessons. I always tell people this, Jason. I never regretted buying a property, but in hindsight, I do regret selling every single one I sold. You know, I mean, I'm not saying I live a life of regret, but had I held on to them, just imagine what that would have looked like through the years of the pandemic when everything pretty much doubled. You know, on
Yeah.
average, things doubled around the country. So, yeah, it's amazing. Hey guys, any classes? I mean, when you got like Mo and Jason on, remember Mo's a member of your team, so you know how to get a hold of her. But Jason's here. Don't be shy, guys. I mean, there's a lot we can learn from the lenders. I would just really quick give you an example. I learned early on, whenever I approach a lender, I never went in there just asking for a loan. I will go in there and say, "Hey, Jason, hey Mo, I want to buy this property. It's a single family, it's a triplex, whatever. Here's what I've already got. What do you suggest is my best approach for how to bring this one on in the portfolio too? What's the smartest thing I can do to acquire this property?" And they will become a member of your team. They want to help you succeed. Am I right, Jason?
100%.
Yep.
It's easier, again, if we're running through your personal scenario and you're learning that, now it's easier for you to become an advocate of mine because you know how it works, you know how to set up the borrower. And it's not always easy when it comes to buying a home. It's not like taking a test drive and then explaining that to somebody. It's a little bit different, but that's a big part of what we're doing. And that's a big part of what Mo has done with expanding her career is being an agent, now being a lender and an agent. She knows the pain of waiting for a lender that doesn't update and doesn't get back and doesn't make sure all the T's are crossed and I's are dotted, and so she can now help with that as well. So it's been huge, and it's a big part of what we see the industry moving towards. But I'm happy to come back on another time, Gary, and we can always dive into that as well if you've got people that are interested in basically full-time pay with less than part-time job.
Absolutely. I mean, multiple streams of income. I'm telling you. I mean, you know, thankfully the stuff I did kind of, you know, lent itself to me being able to achieve that. It wasn't like I had some big plan early on. It's just the way it evolved. But in hindsight, you know, it adds up. When you have a property, hang on to it. When you get it paid off, it's like a bank. You know, you can borrow against it. That's when you're calling your own shots. And the bankers really want to be your partner because they can see that you've done a good job. You're a pretty good custodian with the cash that God gives you. However
And I
you
would say
do.
we all know with buyers, you've got to partner up with a lender for sure. But you should be doing it on your listings as well. If you think about it, as many hurdles as you can remove on a property you're listing, the easier it is to sell, of course. And falling in love with the home should really be the only hurdle. And so, going in, if you've got a property that there are issues, like I tell my clients, I need to be your priest. You need to tell me everything because I'm going to help you put the deal together. So when the underwriter sees it, we go in front of the judge, we got a chance to make this thing work. Well, same thing. They need to tell you everything. So you know what's going to come up with a home inspection. You know what things lie around the corner. And then you can go to your lender of choice and go, hey, all right, listen, we're going to try to sell this. I think we're going to run into some issues because of home inspection, because they told me about X, Y, and Z. What other contingencies do you have? What kind of non-QM products do you maybe have that we can make this work? What, again, whether it's, bridge loan type of stuff, whether it's being able to get money out of a property quickly with home equity line or whatever that is, or condo tells if those are in your area, all these different weird things that are out there that come up. what can we do ahead of time? So when I get somebody who does love the home and their traditional lender who only knows how to do one or two things, because guys, a lot of highly experienced lenders got out of the business. A third of all mortgage licenses were turned in over the last few years. Same with real estate licenses. Think how many rookie realtors have you run into that didn't know what they're talking about? So now you're carrying the whole transaction. Same thing can happen with with some of these lenders out here. So now all of a sudden you need to have that backup plan ready to go. Because again, in the end, the client's only going to remember did it close or not. They're not going to remember that it was the other guy's fault.
Yeah. Oh yeah, absolutely. So, hey guys, it's just a minute or two after 8 here. I'll stay on for a little bit longer if you want. But if you do have more questions, please type them in, particularly if they're for Jason or Mo. And Jason and Mo, you're both welcome, obviously, to stay on if anybody. Sometimes we'll have different subjects, different topics they want to ask questions on. I know you should stay a few extra minutes, but I really appreciate you guys doing this. And guys, if you could give a big shout out to Mo for making this happen and for Jason to come on board and share his personal time with us like this. Big help.
Thank
Really
you.
appreciate it.
Thank you, guys.
Thank you.
Yeah. It was interesting. We had several guest students on tonight that we don't know. They maybe came in from other people who are here on our team, or they just called online. So when this goes out, Jason, it's being shown on Facebook Live right now too, by the way. So that
nice.
goes out, and then the recording goes out to the world, so to speak. So hopefully we can bring you and Mo some business as a result, and then some of these guys might want to follow the footsteps of Mo too, and create a second stream of income.
Sorry, Edith, I saw you had your hand up.
Yeah. Hey, Edith, if you have a question, feel free, or she might have just been saying thank you too.
Oh, excuse me.
But if you have let me unmute you, Edith, just in case. If you do have a question,
No,
feel
yeah,
free.
I was just saying, I'm sorry, I clicked the wrong button. But
That's
thank you, I
okay.
appreciate you.
We're glad you're here. You got a great voice too, Edith.
Oh, thank you.
You should be on radio.
Oh,
There you go. Okay, guys. Well, listen, I'll go ahead and sign off here. Remember, this week is the week of our team call on Wednesday night, the monthly GIA team call. And that's just if you're on the team. So if you don't see any invites for that, it's just because you're just not on the team. It's just we do that once a month. But everything else we do, we're kind of an open book team. You're welcome to come to class whenever you want. Talk to anybody on the team about some of the team resources. We have our own lead sourcing platform you can leverage, AI tools, scripts, marketing plans, you name it. Lots of hundreds of years of experience just in this group right here. So you're welcome to tap into it anytime. Uh, all right, guys. Hope you have a good night. I know I got a full week of one-on-ones, so I'm looking forward to seeing every one of you on the one-on-ones. If you haven't set one up for a while, please do so. And also, if you're interested in agent attraction, remember every day now at 11:30, we meet for a quick huddle, half-hour huddle. Jump on that, and we'll get you up and running in that game too. And that is a good long-term stream of income, second revenue stream that you can't. It's one of those things you work harder in the beginning, but not a lot of pay. But over time, the pay increases. It's compounding. That's why you don't want to wait. You want to start early. So that's every day at 11:30. All right. Well, you guys take care of yourselves, and I will see you in your one-on-ones, and I'll see you Wednesday night.
Thank you for watching this episode of Monday Night Live. Be sure to subscribe to our channel and go to realestatewithgarywilson.com to join our community and start building wealth today.